Thank you all for joining us. My name is Jessica Fulton, and I'm the Interim President and Vice President of Policy at the Joint Center for Political and Economic Studies. I'm really excited to welcome you all to this installment of our Voice at the Table series featuring Deputy Secretary Wally Adeyemo. I'm looking forward to this conversation, and we've just been really trying to put together a great program for you all, but obviously I have to start with extending gratitude to the folks who actually made this event happen and got us in the room today. I have to start by thanking the amazing Joint Center team. I am so grateful for them. They have been showing up and showing out, and I would like for everybody to give them a round of applause. They've been doing a great job. I literally got here and there was nothing for me to do, and that never happens, and I was just so glad. I also want to thank the folks who supported the logistics of the event. The English Hudson Consulting team, the folks here at the District Architecture Center, and the team at Treasury who made sure that you arrived here today, safe and sound. I appreciate that. I think the last set of folks that I want to thank are our board chair, Paul Thornell. Thank you, Paul, for conceiving of this event, the Voice at the Table series back in 2020. Paul and our recent former president, Spencer Overton, really kept this event going, right? We've been joined by members of Congress, like former CBC Chair Karen Bass, current CBC Chair Stephen Horsford. We've been joined by Biden-Harris administration appointees, like Federal Reserve Board Governor Lisa Cook, your counterpart at the Department of Commerce, Don Graves. We're just really grateful for all of you all to continue supporting the Joint Center and making sure that these are able to be successful events, right? Events where we can all kind of understand a little bit more about issues affecting Black communities in our federal policy landscape. And so I'm grateful to you all for attending as well. So today, we're joined by Deputy Secretary Wally Adeyemo from the U.S. Department of the Treasury. I'm going to read a little bit about him. You all know, obviously, because you're here, how important this conversation is. But Wally Adeyemo was sworn in as the first Black Deputy Secretary of the Treasury in March 2021. He's been at the center of many of the country's major economic policy decisions since the 2008 financial crisis and has worked in organizations across the public, private, and nonprofit sectors to build a stronger and fairer economy. As Deputy Secretary, he serves as the Treasury Department's #2 official and Chief Operating Officer. He's taken a leading role in Treasury's national security, economic inequality, and pandemic-related economic recovery work, while supporting the Secretary in driving the department's fundamental mission, promoting economic growth and ensuring the financial security of the United States. So it is no surprise why we have him here today to talk about Treasury's impact on Black communities. So, Deputy Secretary, we are honored to have you here with us today, and I just want to turn it over to you in case you want to give a few opening remarks.
Let me start out by thanking the Joint Center for all the work that you do. Spencer and Paul have built a fabulous organization, and I know this is called the Voice at the Table conversation, and I think the reality is that the reason people like me have our voice at the table is because of the work that people at the Joint Center have been doing. Fundamentally, getting more people who look like us at the table is part of the mission of this organization, and it's one that I have to personally appreciate because the reason people like me are at the table is because of that work. And part of the goal for me has to be to make sure that more people who look like us have their voices heard at those same tables. So it's good to be here with you today and to talk a little bit about where we are and where we're going in terms of economic policy and how it impacts the Black community. And I start from a place of when I joined the Biden-Harris administration, I was living on the south side of Chicago, running President Obama's foundation at that point, but seeing the impact on the Black community there on the south side of Chicago. And I think one of the things that inspired me about President Biden was the idea that he was focused on making sure that the people who were the most impacted by the pandemic were the ones that we were going to direct our resources through to as we work to get through and into a point where today you and I are able to sit here in this room because of the policy actions and decisions the president made and the grit and determination of the American people. But you have to remember that when we started in that administration, we were unable to gather like this because most of us hadn't been vaccinated. Today, any American who wants the vaccine can get a vaccine. Our economy has, especially when you think about the Black economy, has come back to pre-pandemic levels faster than any recovery in modern history. And the thing to remember is that when you think about the 2008, 2009 financial crisis, Black America was barely getting back to where they had been before that when the pandemic hit. And I think the reason for this isn't just happenstance. It's because of dedicated policymakers within our administration who took many of the policy ideas that were developed in places like the Joint Center and applied them. And I'll talk about just three of them really quickly. The Advanced Child Tax Credit. Think about the impact of the Advanced Child Tax Credit. When you think about supplemental poverty rates in this country, for Black Americans, it was reduced by 40% when we had the Advanced Child Tax Credit. For Black children, it was reduced by 50% because of the Advanced Child Tax Credit. That's partially why the president wants to make this tax cut for families permanent going forward, because it will significantly reduce the poverty rate, not only for the Black community, but for all communities. You think about emergency rental assistance. In America, too many people in our communities, in communities throughout the country, are being evicted from their homes. We all know that a house is more than just four walls. A home is critical to everything from mental health to financial stability to our children's education. Because of the emergency rental assistance money, $46 billion that this administration put into the economy, we saw the rate of Black evictions drop over that period by 50%. Even today, after the program has ended, because of the infrastructure we put in place, Black evictions remain lower than pre-pandemic levels. And I think this again speaks to the thoughtfulness with which we put in place policy. And the final one I'll mention is the Capital Projects Program, which is focused on making sure that people throughout this country have access to high-speed internet. And the truth is that 40% of Black families don't have access to high-speed internet. And I know this personally because when I was living on the South Side during the pandemic, they sent all the kids home and they told these kids that you're going to learn online. But many of these kids didn't have access to an iPad or a computer. And even if they got access to these devices, their homes weren't wired for high-speed internet. So a big focus of this administration has been how do we make sure that every American, every Black American has access to high-speed internet, because that allows them to get access to the future. In economic policy, we often talk about this idea of economic scarring. And it's what happens when you, during a recession or a downturn, you end up losing the progress that has been made. The policies we've implemented over the course of the last 2 years has helped to reduce scarring. And that's partially why we're in a position where employment for Black Americans and also labor force participation has returned to pre-pandemic levels so quickly. Why we've gotten to a point where you've had the lowest rate of Black female unemployment in history. There's so much more we need to do in order to make sure that we continue to make progress. But I do think that because of the work of the Joint Center and some of the policies you've advocated for and the way they've been implemented by this administration, we're in a better position today to make that progress than we would have been given what happened during the pandemic.
Thank you. I want to go back to something that you mentioned at the beginning of your remarks around diversity in key government roles. I think we think of Treasury as a key partner on making sure that there are Black folks involved in decision making at the highest level of economic policy making. And I think we want to make sure that we're able to continue to make an impact. Can you talk a little bit about how you all are approaching diversity and how we can help to ensure that that more folks that look like us are in these key roles?
Yeah, and I think that it is important. I had the fortune early in my career of being Senator Elizabeth Warren's chief of staff when she started the Consumer Financial Protection Bureau, and that's when she started to make very clear to me, and it's true that personnel is policy. Getting the right people around the table is critical to making policy. And I think part of the challenge we have is a structural one in terms of oftentimes the way that we recruit for positions limits the ability of people from diverse backgrounds to be able to get into these positions. So I think there's part of this that is, how do we make sure that amongst the senior political ranks that I'm at, we have people who look like the country. But there's also a piece of this that I think is equally important in terms of how do we make sure the career professionals who serve throughout all administrations look more like the country that we live in, and we're taking efforts to do both. So I think part of this for us is in engaging in a conversation with groups like the Joint Center in terms of how do we build the pipeline to get more people so that I'm the first, not the last, in a position like this, and that it's not only in my position, but in positions throughout the senior leadership. But we've also, for the first time in the history of the Treasury Department, first time in the over 200-year history of the Treasury Department, named a counselor for racial equity, which is a political position. But we didn't only name a political person, but we're also building an office within the Treasury Department, a permanent office that will be staffed by career officials that will be focused on this set of issues going forward. It's something the Secretary was very focused on because she's worked in government for 40 years, and she realizes the only way that you make progress and this becomes a movement, not a moment, is if you put in place permanent structures that are driving these policies. So we're now going out and recruiting to fill this office. The goal is to make sure we fill the office with a group of people who care deeply about these issues so that the more than 80,000 people who work at the Treasury Department reflect more of the diversity of this country in a way that allows us to make sure that policymaking, not only at the very senior level, but at the level that touches the day-to-day lives of people on a regular basis in field offices in locations throughout the country, better reflect and create openings for people who look like America to be a part of it. So I would say that we've made progress. We're far from perfection. There's a lot of work that we need to do. We appreciate the efforts of many people in this room, including Paul, to both push us and help us and advise us, and we've got to keep working at it.
One of the other things you mentioned sort of when you started was the situation that we were in at the beginning of the Biden-Harris administration, and also the challenges that we faced during the Great Recession. I actually listened to your remarks, I think, when you were first nominated, and you talked about being from a place that was severely impacted by the recession. And when I think back to where we were in early 2021, Black unemployment was at 9%. Now it's down to 6%. I think among many measures, this is one of the most inclusive recoveries, or the inclusive recovery, that we've seen in this country. Could you talk a little bit about the role that Treasury played in mitigating the impact of the challenges that we faced since President Biden took office?
Yeah, and I think I would argue that it is the most inclusive recovery that we've seen. And that is because it was intentional in terms of the way that we designed these policies. And I served in the Obama administration, and there we faced the financial crisis. And I'm from California, a part of California that's east of Los Angeles called the Inland Empire. The Inland Empire was hit hard by the Great Recession. And I remember working in the Obama administration and going home and seeing the foreclosure signs in the neighborhoods where I was from, and the ways that the Great Recession hit the people who were the furthest away from Wall Street, in ways that not only set them back, but set their families back and their children back. And I think we came in with an explicit direction from the president and the vice president around the idea that we wanted to make sure that these populations that were being the most impacted by the pandemic were going to be put in the best position to make sure that they shared in the recovery. And that's why, as I outlined it, we were so intentional about programs like the Emergency Rental Assistance Program, where more than, I believe, 50% of the money went to extremely low-income people. When you look at the Advanced Child Tax Credit, I know that now in retrospect, we think about how great that program was, but ultimately no one thought the IRS would be able to give out a monthly check to families on a regular basis. That took intentionality about execution. And oftentimes what we do in Washington, D.C. is we focus a lot on legislating, making sure the legislation is done well. And we often forget that the truth is that the place where decisions about equity are really made is on execution, how you're implementing the laws. And I think one of the things the secretary was very intentional about was she said, I'm not just going to let various parts of my department decide how to implement this. I'm going to create an office that's in charge of executing against the American Rescue Plan. I'm going to tell them that I want equity to be at the center of that execution. And because of that, you saw the results. And the results look differently than if you had simply said, go out and execute each part of the department in the way that you saw fit. And because of that, you've seen the results in terms of the reduction in eviction rates, not just across the board, but significantly amongst the Black population. You've seen the way that the Advanced Child Tax Credit got to Black families in a way that reduced poverty rates in a significant way. And I think you have to remember that for many of one of the most important features of the advanced child tax credit was that it was refundable, which meant that people who may not have needed to pay taxes, who weren't involved in the tax system, needed to come to claim that credit. And as you can imagine, members of our community who didn't have to be involved with the IRS were not looking to necessarily go sign up to work with the IRS. So it was lots of people in this room, the groups that you represent, that helped us go the last mile in terms of going into those communities and convincing people that it made sense for them to fill out these forms in order to get that credit. And I think one of the most important humbling lessons that we're having to learn every day at Treasury Department, but throughout the government, is that we can only do this work well in executing in these communities that matter if we do it in partnership with groups. I think the most important thing for us as we go into executing against the Inflation Reduction Act, the CHIPS and Science Act, the Bipartisan Infrastructure Law is that we know that if we try and do this alone and the government without working with outside groups, we're going to fail to make sure that we meet the president's equity goals. So we're taking the lessons that we've learned from the recovery to make sure that we sustain an expansion that is equally as equitable, if not more equitable, going forward.
Thank you. I think that's an excellent policy lesson and something for that everyone in this room is probably going to be looking forward to working with you all on moving forward. We're in a moment, right, with a lot of economic potential, with a number of the laws that have passed as part of President Biden's industrial policy agenda. I know that these bills are intended to modernize our economic systems and we're combating climate change. I think they are also an opportunity to build wealth for a lot of families, a lot of businesses, a lot of communities. How can we ensure, right, working with you all, that Black communities are well positioned to take advantage of the investments that Treasury is making?
Yeah, maybe I'll step back and just for a moment talk about why we think it's not only important for Black America, but it's important for all Americans to make sure that Black Americans can take advantage of this. Fundamentally, one of the issues I spend a great deal of time working on is national security. Ultimately, Americans' competitiveness is critical to our national security. And the places in America where we have the most unrealized economic potential are communities like the Black community, where because of systemic racism and other issues, we have not been able to take advantage of the large amount of potential that exists in these communities. So part of the reason that we're focused on making sure that these investments are being made in a way that are equitable is because we think that is the best way to grow the economy in a way that makes the American economy more competitive vis-a-vis our competitors and our allies as well. So it isn't just because it's the right thing to do, but it's also because it makes a great deal of economic sense, not just for Black America, but for all Americans. And this underlies, I think, one of the best books that have been written about this is Heather McGhee's book, Some of Us, because ultimately that's what we have to do at the Treasury Department. And that's why, taking a lesson from the American Rescue Plan, Secretary Yellen named a person to be in charge of IRA implementation, so the Inflation Reduction Act, and thinking through how we not only make sure that this money is getting into the economy, that we're meeting our climate goals, our energy security goals, and our job creation goals, but that we're doing it in an equitable manner. And the lesson that I spoke about earlier applies here again, where the problem we often have with implementation of these laws is what I would call the last mile problem. In terms of the people who know how to take advantage of these tax credits, of these opportunities, are the big corporations or the businesses that have always taken advantage. So a big piece of what we're doing is trying to make sure that we're forming the relationships with many of the people who are in this room to make sure that if you are a small business owner, a Black small business owner, a Latino small business owner, a female small business owner, you know about these tax credits that can help you in terms of both research and development, allow you to get access to the procurement opportunities that exist. And doing that is labor-intensive work that's going to require us to work closely with these communities more directly. And that's why we have a staff that's going to be dedicated to doing that work going forward. But in addition to the tax credits for businesses, there are a number of these tax credits for individuals. When you think about everything from purchasing a new car, which is a major investment, to replacing things in your home, which are major investments, there are tax credits that are available to members of our community. Some of them are tax credits that you can get regardless of income. The key, though, is that we have to make sure people are aware of them. So a big piece of this for us is awareness. But another piece of this is also making sure that we direct our policies in a way where people know that we're being fair in terms of our implementation. And that is something that we're focused on at the IRS in terms of looking at places where historically the IRS has not promoted fairness, trying to make sure that we address that immediately. And we make clear to people that we're not only collecting taxes against working class individuals, but we're actually going out there and making sure that wealthy individuals who may not get a W-2 are actually paying their fair share as well. I think is important to members of our community as well.
Thank you. I was going to ask a question about the IRS because I am really into taxes right now. It's a thing. So we know that one of the IRA's goals was to modernize the IRS. And I know that a little bit of that funding has been cut back a bit, but could you talk a little bit about what steps the IRS is going to take or Treasury is going to take to modernize and make the tax system a little bit more fair for Black communities?
Yeah, and I think the key thing to mention is that for a decade now, the IRS has been underfunded. And for any one of you who has ever worked in a business or worked around a business, you have to ask yourself, why would you take the part of your business that takes in revenues and underfund it? And I think part of the reason that it's been underfunded is because the IRS is seen as something that benefits the American people in ways that those who don't want to pay their taxes don't care for it to do so. So there's been a concerted campaign to reduce the funding of the IRS over time. And now we have a historic amount of money to modernize the IRS. And what does that mean really for Americans? And I think a big piece of this is what you saw this year. It means improved customer service. So when you call the IRS, someone will pick up the phone. So that you can go into an IRS location, that if you speak a language that isn't English, you have access to information in that language. And in addition to the IRS caring deeply about you paying your taxes, the IRS should care deeply about the idea that you get your benefits from the IRS. If you're eligible for the Earned Income Tax Credit, you should get the Earned Income Tax Credit in order to make sure you have the money to help feed your children and to create opportunity for yourself. If you're eligible for the Child Tax Credit, you should get that as well. So modernizing it means the IRS is not only thinking about collecting your money, but it's also making sure that you're getting the money you're eligible for if you're an individual or you're a small business. But it also means making sure that when we're thinking about compliance and enforcement, we're doing it in a fair way, that we're focused on compliance for the people who owe the most money. And that is people who make more than $400,000. Each year, the IRS undercollects revenues by about $500 to $600 billion. $500 to $600 billion each year under collections. The top 1% of Americans who make incomes in this country represent $160 billion of under collection each year. That means these are people who are not paying, we're not talking about increasing their tax rates. We're simply talking about them paying the taxes they already owe. But the IRS has been the reason the IRS is, and part of the reason the IRS has been underfunded is because there are people who don't want us to be able to collect that money from those individuals who have lawyers and accountants who can often help obfuscate their taxes and make it hard for us to collect them. We finally have the resources now to make sure that we're collecting that revenue. And what is it that we can do with the revenue if we collect it? Is we can pay for things like the Advanced Child Tax Credit. We can pay for programs that are going to matter to making sure that we can grow our economy and helping working families. And we finally have the resources to do that. But in addition to doing that well, we need to make sure we're earning the trust of the American people. Earlier this year, there was a research report done that showed that the IRS across income spectrums was in ways discriminating against people of color, namely Black people, in terms of some of the auditing behavior. And I think one of the things the new commissioner is committed to is fixing that and addressing that meaningfully before the next tax filing season. I think part of that is looking at programs like the EITC and some of the enforcement activity we do there, but it's also looking more fundamentally at whether there are things that are leading to bias throughout the systems. And I think it's important for us to be honest about the fact that we're doing this work and being committed to coming back to people and being transparent about the steps we're taking to address it, because that's the way that we earn trust with these communities, and people want to interact with the IRS if they know that we're addressing the challenges that have existed for too long.
Thank you. I have just one more question, and we're going to open it up for a little bit of audience Q&A. Real questions, not remarks. So on day one of the administration, President Biden signed an executive order directing agencies to work to address inequities under their jurisdiction. Where have you seen the most success at Treasury in implementing and developing the agency's racial equity plan? And where do you think there's room to do more? Where do you think there's room to do more, and how can we support Treasury in taking the work another step further?
And I think from my standpoint, one of the, my job is to be the chief operating officer of the department. And for those of you who have been executives or had to lead, the key thing is getting the right people in place. I think the place where we've succeeded is we've started to build structures that are going to last past the Biden-Harris administration, and hopefully decades from now will be part of the Treasury Department, that will mean that equity is more at the forefront of all policymaking. So building this office, making sure that different parts of the department have people who are thinking about equity, who are not just political appointees, but career officials. I think that's a place where we have been succeeding. I think we've got to fill more positions. So I think that's a place where we can continue to get help. And I think the other challenge that I care deeply about, that I think we're still working on how to address, is what I call the last mile problem. Even if we design the world's best policy and we're trying to implement it in a way that is equitable, the key has got to be making sure that we're able to deliver that thing to the person who needs it. And that is incredibly hard because of a number of issues, including barriers that include trust, language, access, and we need help solving that last mile problem. We need solving it in specific communities, but we also need to figure out how we can, in a scalable way, solve it in order to make sure that the people who need the most access to things like the earned income tax credit or the child tax credit or all the tax credits that are available as part of the Inflation Reduction Act climate provisions are getting it. We need help doing that better. And I think that's a place where engagement with people who are thinking about this from a policy perspective, but people who are also on the ground, could be quite helpful to us going forward.
Thank you. We're opening it for Q&A. I have an assigned question that was already sent to me, and then we're going to go here and here, okay? So this is from the National Fair Housing Alliance, one of our partners. How is Treasury working to ensure fair housing is embedded in its housing and community development funding programs, such as the Low-Income Housing Tax Credit, CDFI Fund, and recent programs created through the American Rescue Plan, Infrastructure Investment and Jobs Act, state and local fiscal recovery, all of the laws, right? How are we embedding fair housing?
Yeah, and I think part of this for us is being in partnership with the Department of Housing and Urban Development. Fundamentally, the best way for our housing programs to work together in the federal government is for them to work together in the federal government. And I think when you are out there, and before I was in the intervening years, when I left the Obama administration, before I came back to the Biden administration, I chaired a group that was looking for ways to build affordable housing here in the District of Columbia, that was working with Black churches and white churches to see if we could use some of the vacant church land to try and build housing on it. And the hardest part of doing any of that was building the capital stack. How do you bring even federal money together to do this? And I think one of the things that we're looking to do more and more is saying that if you have LIHTC funding, how can that funding be put together with other federal funding, be it American Rescue Plan funding, and some of the requirements and standards that are created by HUD in order to make sure that we're advocating for fair housing in the ways that make sense and that they're being connected to dollars. Because ultimately, the way you create incentives for people is that you don't just create rules for them to follow, but those rules are attached to money, because money often will drive behavior. So more and more what we're looking to do is find ways that we can partner with HUD, because the thing that I think I've heard from a number of affordable housing advocates and also people who are looking to build affordable housing is that we not only need to have standards around fair housing, but we need them to be the same, so that we don't have slightly different standards from the Treasury Department than we have from HUD and from another agency. So from my standpoint, standing back humbly and saying that we don't at Treasury need to reinvent the wheel. What we need to do at Treasury is work closely with HUD where the expertise lies to make sure that we're doing as much as possible and as much as the law allows for us to align with what HUD is already doing.
Hi, my name is Clev Mesador, former Obama appointee, and my question is about crypto. Regardless of how people in this room feel about crypto, it is a $1 trillion market. And one of the crypto companies went public in 2020, got clearance from the federal government. My question is about regulatory policy. In the 1990s, when we debated the internet, the questions we did not ask, and today the internet benefits for wealthy white males. Today we're debating the regulatory framework for crypto. And right now, the only people the federal government is listening to are wealthy white executives. Even when you look at Treasury and other agencies, they're creating working groups and councils, and they're still going to white executives. We have an opportunity to make sure that the Black leaders in crypto, and we have CEOs, senior executives, are not ignored in the regulatory process. We're actually going to gather in Martha's Vineyard the week of August 14th, so we can actually get to face with Black leaders to say, we are here too, and you need to start listening to us. It was disappointing when Chairman Waters was chair of financial services that we couldn't get a DEI hearing to hear from Black and Latino leaders. So my question for you is, Treasury is in a position to make a difference so that the regulatory body as well as the legislative body is listening to Black leaders in crypto, because right now, too many of us feel like invisible figures, and the only people who are weighing on policy are the very the same people that will lead us in the same path.
Do you mind if we take the second question too and bundle them? Okay.
Good morning. Name is Lauren Douglas, and I'm here representing Sigma Pi Phi. The question I have for you is, can you dig a little deeper into those programs that Treasury has that will align business with, you talked about with, I think, the Infrastructure Act and so forth. What does Treasury have in place that Black business can align, and brown business can align with?
So let me take both of those questions, which are a little different, but I'll try and weave them together. I think my view is that we want to hear from all people who are involved in the crypto ecosystem. And I think what you should do is, I have a member of my staff who's here is willing to take your information, and we're happy to engage and to hear from you. I think fundamentally our goal here is to think through a regulatory architecture when it comes to crypto that fundamentally tries to do a few things. One is protect financial stability. Two is make sure that investors and consumers are protected. And three is also making sure that we're not allowing it to be a route for illicit finance. Within that, I do think one of the things we have to focus on, I think one of your questions got at that, is to make sure that equal opportunity to gain wealth exists for the Black community. Oftentimes, we talk about what we're doing in terms of trying to deal with creating a floor, but we also want to make sure that there's not a ceiling. And we want to ensure that you have access to the same rooms that other people have access to. So Faith will take your information, happy to make sure that our team is engaged with you on these issues so that we hear perspectives that may be different when it comes to thinking about the crypto industry. In terms of, from a business standpoint, I think one of the major things that I think is critically important, and I'm often reminded of this by a good friend who says that we don't only need access to capital, we need access to customers. Because for a business to survive, you don't only need loans, you don't only need equity, you need customers. I think a big piece of this for us is that right now the Treasury Department is in the midst of implementing the IRA. The IRS is going to do this by modernizing the IRS. There are going to be procurement opportunities at the Treasury Department for businesses that are in the technology space, that are providing all kinds of opportunities. And I think those procurement opportunities we want to try and make sure that small disadvantaged businesses run by people of Latinx and Black backgrounds have access to that. So that is one place where I think that people should look. But in addition to just doing business with the federal government, which I think is a place where we're committed to trying to make sure that our procurement goals speak to our values, we also are providing capital, because I think ultimately I was in Memphis maybe a few months ago and I sat down with 8 Black female entrepreneurs who are running their own companies. And each one of them complained about the idea that they just did not have access to capital. They couldn't find a bank that would give them a loan because they'd only been in business for 2 years, but not 3 years, or they didn't have the paperwork that was needed. But I think one of the things that we've done is that we've placed $9 billion of capital into CDFIs and minority-owned depository institutions, including Black banks in this country and CDFIs and communities. This is money that they are going to lend out to institutions in our communities, and people should take advantage of that by going to try and seek access to the capital that will help them build their businesses. In addition to that money, we have a program called the State Small Business Credit Initiative, which is money that is directed to trying to grow the small business ecosystem, and a sleeve of that money is directed towards disadvantaged businesses that are run by women and people of color, in order to help them get access to the capital that they need, again, to try and grow their businesses going forward. So I think part of this for us is making sure that we're creating procurement opportunities, and we're doing that in the government. But in addition to doing that in the government, one of the things that we've done is we've worked with the private sector to push some of the largest companies in this country to also make commitments around providing not only financial support in terms of capital, but also procurement opportunities. We've created a table called the Economic Opportunity Coalition that includes 24 of our country's biggest companies and 4 of the biggest foundations, many of them that have made commitments to, alongside the Biden-Harris administration, provide support to these communities, be it capital, technical assistance, or procurement opportunities.
Is that written somewhere?
That is, you can go, I believe it's the Economic Opportunity Coalition has a website. You can find that on that website. And these are companies that are committed to walking alongside the administration to make sure that we're creating scalability in these communities going forward. So those are just a few examples of the things that we're doing. But ultimately, I think for us, we want to be in partnership to figure out how we can help build an ecosystem of support. One of the things that I think have been the most impressive over the last 2 years has been we've had record numbers of small businesses created around the country, particularly in Black and brown communities. The goal has got to be to make sure that we don't have record numbers of small businesses failing. And that requires both finding customers for these small businesses, but also getting them access to capital and technical assistance. And I think that is why we're so interested in building an ecosystem that isn't just the government, but also getting these bigger private sector players to also create opportunities for you to be there, for them to be your customers, but also to provide you with access to capital.
Okay, we're going to bundle 2 more questions, and then we got to go. We also have one over here.
Hi, I'm Tim Shaw with the Aspen Institute. I really appreciate your and the administration's focus on implementation in addition to policy. I feel like the ecosystem is starting to kind of get around that as an important focus. But one of the phrases that has come up is, in that focus, culture eats policy for lunch, that if you don't have a culture at an agency of actually doing the equity work we know needs to be a focus, then it won't happen. I'm curious how you found the challenge of changing a culture in Treasury and the IRS around focusing on equity outcomes, and also how we outside of government can help you, not just on the policy side, but in the cultural transformation you need to do.
Hi, Chase Winner with Energy Intelligence. If I may ask a non-domestic question, your purview extends, across the international stage, and I was wondering a little bit about Treasury's enforcement of the G7 price cap as euros spikes above 60, and this kind of creates this difficult situation where, enforcement could lead to a spike in oil prices, hitting the U.S. consumer. And meanwhile, Russia is developing a shadow fleet. I'm sure there's been some successes sort of in the Pacific. Treasury issued a warning in April, and since then, sort of Western insurers and shippers have left, but now you have an issue here in the Baltic and Black Sea, and I was wondering, how you plan to address that as far as enforcement, et cetera. Thank you.
I will not knock your hustle for sitting through a conversation to try and get your energy question in. So I will answer that, but first I'll do the culture question. For that, I will give you a detailed answer to that question in a moment. But I think you're right that ultimately the thing you've got to do in an institution as big as Treasury is shift culture. I am fortunate that I'm a return player in this institution. I spent the better part of a decade at the Treasury Department working for 3 secretaries now, and you're right. The place is driven by a culture, and I think that's partially why we've got to get the right people in place, because the way you change culture, the way you influence culture is by getting the right people in place. The challenge we have at Treasury, but the opportunity we have at Treasury as well, is that over the next, I believe, 5 years, 60% of the people of our 80,000 employees will be eligible for retirement. So that, from the standpoint of being the chief operating officer of any business, has got to concern you. But I also think of it as a real opportunity in a way that it allows you to bring in a great deal of new talent to think through these challenges. And I think we've been intentional about structures, both in terms of naming a racial equity counselor who doesn't just work on issues that are on at the side of the house, but is integrated into all of our conversations, who's building out a team that includes career officials who are central to the organ of the organization, and then making it not just her responsibility to think about equity, but making each one of our senior officials responsible for thinking about equity in their work. And as they report back to us, thinking about the equity impact of the different initiatives, I think that's where you start. You build it into the process, because from my standpoint, when I think about running an organization, there are 3 things that matter: people, process, and policy outcomes. And I think if you get the people and the process right, that's 80% of getting the right policy outcomes. So very focused right now on making sure we have the right people in seat, and 2, building a rigorous process that includes asking questions about equity in that process to try and put us in the best position that by the time the thing lands on my desk, they've gotten it to a place where I am helping to put the finishing touches on it and already has integrated equity, rather than I'm asking the equity questions at the end. To your question about Urals, the reality is that we have to remember a few things here. The price, in the data that we've seen, the price is nearing $60 a barrel. Ultimately, we set the price at $60 a barrel. The way that we judge our success here was twofold, and the Secretary laid this out very clearly. 1, that we were going to reduce Russia's revenues, and 2, that we're going to keep oil markets stable. That's working to date. Russia revenues, at least by reported, not just by what we've seen externally, but what the Russians have said, have fallen by as much as 50%. In response to the price cap, Russia has passed through the Duma a new set of taxes where they've said that they're going to start considering taxing their oil companies, not based on the price of Urals, which is the oil they're selling, but based on the price of Brent, with a significant discount to that, because they think that might be more stabilizing for their budget going forward than the alternative. And ultimately, we've seen stability in oil markets. Although they haven't been publicly realized, we've seen a number of enforcement actions here that have been done by the private sector. We're in constant conversation with the P&I clubs, and whenever we provide them with information about ships that may be taking actions that are inconsistent with the price cap, they've taken action on their own. We've seen actions taken by the flagging nations, and we're consistently looking for ways in which we can continue to drive Russia into a set of very difficult choices. Choices between continuing to build out their ecosystem for selling oil versus investing in tanks to fight their illegitimate war in Ukraine. And we're going to continue to drive those hard choices. I think everybody's focused on where the price is, but the thing that people aren't focused enough on is that Russia's costs have went up significantly. The cost of shipping, because now they have to ship all the way to Asia rather than shipping to Europe, has went up significantly. Buying their own boats, setting up their own insurance company, $9 billion from the Russian state to set up a reinsurance company is $9 billion they're not using on their war in Ukraine. So our goal now is to continue to drive up their costs, to reduce their revenues, and to take steps to make sure that people recognize that we're going to continue to enforce it. We feel that, and we've seen in the data, that Russia is struggling to meet their bills because of the price cap, and our goal is going to make sure that we increase their cost until they end their illegal invasion of Ukraine. Well, I can't thank you all enough for joining me today. I want to just say how important the work is that you do here. Despite the set of issues that are varied that I deal with, from Russia, Ukraine, to issues of thinking through how we build the department, I think one of the things that the reasons I'm here is to send the message that we need your help. We need to work in partnership with you, because my view is that we've had probably the most equitable recovery in history, but in order for us to be in a position to make sure that the expansion is even more equitable, we need to work in partnership to solve not only the last mile problem, but to make sure that the great policy ideas that are being developed here make their way from here into the administration. And the Secretary and I want to be your partner in this. So thank you so much for having me.
Thank you for joining us.